What's going on with NIO stock? NIO is up over 9% today, so what's the news here and where's the stock headed next? If you remember, I did a deep dive video on NIO not too long ago, and we had an earnings report here since recently. I'm going to cover that real quick, give you an update. We're going to look at valuation, and we're going to look at a chart and see where the stock could be headed next. Let's get started. So you can see NIO is up 9.29% today. It's trading right now at $8.47 a share. It's down 47% over the past year. It's up about 6.5% in the past month, and it's up 10.37% in the past 5 days. Now, the 52-week low was exactly $7. The 52-week high, $24.43. So NIO reported earnings here just on June 9th. You can see negative 36 cents, beat by 5 cents. Revenue, $1.55 billion. That's up only 7.7% year over year, missed by 80 million. The company delivered 31,041 vehicles in the first quarter of 2023. So Q2 outlook, they expect deliveries between 23 and 25,000 vehicles. Now that's a decrease between approximately 8.2% to 0.2% depending on where it comes in. And you can see revenue decrease of approximately 15.1% to 9% from the same quarter 2022. So why is the stock popping today? So this was pre-market. It was up about 4% after the Chinese electric car maker said it was cutting prices for its vehicles and ending free battery swaps for new buyers. Last week, NIO also said it was going to delay some CapEx projects. Now, if you remember the video we did a couple of months ago on the channel, we talked about one of the biggest threats, the biggest risk for NIO stock really came down to their cash burn. So this is a positive. Investors are seeing this as a positive because they're spending less money on these CapEx projects and then the free battery swaps. We talked about the battery swap technology and how expensive it is not only to build the stations, but really to maintain those stations. And NIO does have a strong consumer base. It has that cult following like Tesla does. And NIO certainly has the ability to monetize some of the, make some money on battery swaps. Maybe they charge subscriptions we talked about for NIO houses. So I think here as an investor, the positive that we're seeing is that NIO is starting to look in the mirror and say, okay, we need to figure out this cash burn. We need to do a little bit better. Now, of course, as an investor, you want some cash to be spent because you want the company to grow. But we had said in that video that really the cash burn was out of control, and starting to rein this in a little bit, getting on a leash, I think is a positive for investors. So that 52-week range, guys, $7, that was on June 1st. That just happened. And then that 52-week high was around a year ago, June 27th of 2022. It was $24.43. So this is a mid cap. It's about a $13 billion market cap. It's trading right now just under $8.50, up 9.51% today. Now, of course, this does not have a PE ratio, so let's look at some valuation metrics. So right now, the price to sales ratio is under a 2. It's at 1.78. Price to book is 3.71. And this does not have a PE. It doesn't even have an estimate for next year's PE, so it's not profitable yet. So this company, of course, is still in growth mode, and we really call this a spec stock, a speculative stock. And I know some people that are watching this video don't want me to say this. They don't want to hear it. But NIO really is a spec stock. That means it could be a 10x from here, or it really could go to 0. And of course, you manage those spec stocks by having a basket of spec, a controlled amount of portfolio, 5 to 10% with maybe 10 or 20 stocks. But again, I'm not a financial advisor. I can't tell you what to do, but it's part of my job just to explain to viewers, the risk for different stocks. I think NIO could have some upside here. We're going to look at a chart, but it is important to recognize that this is a spec stock. So very high risk, very high reward. Now, valuation metrics, it's really hard here because, it doesn't have that recurring revenue. You don't have a P ratio. So you're really looking at price to sales and really the story of where it could be in the future. So under a 2 price to sales, it's as attractive as it's ever been since it's been a publicly traded stock. But that doesn't mean that, the stock can't go down from here, that it can't lose some of that value. So I'm a visual learner and you probably are too. So let's just look at this. This is price to sales ratio that's showing you where it's been and where it's at now. You can see here back in 2019, it was trading, around 3, 4. It got down even to 2 here. The lowest I see is October 8th, 2019. It was a 1.43. Now in November of 2020, this was up to a 33.72 price to sales. And you can see in February of 2021, it was above 31 price to sales as well. And it's fallen off a cliff, of course, since then. So the cheapest that we can see see here is basically October of 2019, 1.43. And we got down to about a 1.6, 1.7 here recently, end of May, early June. And now it's trading at 1.9 price to sales. So it's technically not the cheapest it's ever been from a price to sales ratio. It was a little bit cheaper here in October of 2019, but it's in that same level. And of course, you already know this. You want to buy low and you want to sell high. So of course, you don't want to be buying up here at 30 price to sales. So could you make an argument that under 2 price to sales could be an opportunity? I think the answer is yes, but let's look at a chart. Now, before I do that, if you're new here, please subscribe to the channel, click that bell for notifications, and do me a favor, drop me a comment below. Let me know what you think about NIO stock. Is it a buy here or not? And if this video is helpful, drop a like. And thank you for 40,000 subscribers. That was the goal for the end of 2023. We hit it 6 months early. Now, I also need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community, Patreon Discord, by visiting patreon.com/firedupwealth. Now, we've had a ton of members join our community recently. The Discord community is absolutely on fire this year. So I encourage you guys to join that. And regarding the Motley Fool, I want to remind you guys, they don't tell me what to make, what to tell you guys. I'm completely independent. They're a great partner, and check those guys out. Now, every single Wednesday, we do chart day in Patreon Discord. When you see orange, that's a previous chart day. When you see yellow, that's today's chart day. So previous times that we've covered NIO stock, we said here, not a great chart. Downside prevails as long as 1040 is resistance, 750 or less possible on downside. Well, guess what? We got $7.33 here in May. Now, when we did the YouTube video, I said that I like this $8 or less DCA. In other words, dollar cost average, don't buy it all at once. Now, if you did that and started at $7.59 and bought a little bit as it went lower, you're probably doing pretty decent right now. The question you have, is it a buy right now at $8.49? And then on the most recent chart day, we talked about it was under $7.50 in a downtrend channel. Could bottom soon, 650 possible. We said possible retest at 733 or a bit lower around $7. And it got right to $7. In fact, intraday, it got down to $6.97 a share. And it bounced off that. And then we got the news today, and that's really fueled a pop. So traders are really piling into this. Now, what's interesting about NIO is it has resistance right now at about $8.52. So you can see these two blue lines here. This is it's really in a downward channel, and it easily could have drifted lower. Down here, this S3, this is Fibonacci pivot points. This S3 is like $5.71. Of course, it didn't get there. It got to $6.97, and it bounced off there. Now you can see it broke above this channel, and it really needs to break above 850, really $8.52 to really show upside from there. And it's sitting right now at $8.46. So it's really in a tough spot right here because it could easily consolidate and break down, or it could push higher. If you see this get to 850, 860, I think you could have some follow through, and it could push a little bit higher from there. This R3, this blue line right here, is about $9.57, and it could climb up to that range if the market stays bullish. What you have to be careful with, we have CPI data and PPI data this week. So you're going to have macroeconomic data, and that could make the whole market sell off. And they could easily break that back down into this channel. So you really know the range here. It's around $7 and trading right now $8.50. So the total range is between $7 and $9.57. If you're bullish on NIO and you're a long-term investor, it's probably not a bad area to DCA. I would have preferred it again, $8 or less. If I'm looking at just momentum from trading, swing trading, what have you, it really needs to go a little bit higher and push. We're kind of at this neutral ground right here. Bears and bulls are trying to figure it out. And it could easily run higher from here, or it could break down, and it's going to depend on that macro news. So I really think you have to pay attention closely to what happens with inflation data. Now, you could also have inflation come in lower than expectations. The market could rip, and this could beat $9.50 by next week. That could happen. So just some quick analysis here to get back into the swing of things, guys. I hope this was helpful. Make sure you drop a like and a comment. Subscribe if you're new here. Have a great rest of your day. Take care.